what I want to do now is to quickly show you a variation of the previous question. We've got a similar question, Sang Sang Limited. The year end is on 31 December 2013. We're given the pre-adjustment trial balance on the 31st of December, which means that all of these balances will be the balances or totals on 31 December unless something else is specified in the information here. You will see for accumulated depreciation, the date specified is the 1st of January. So all the other balances we can assume is on 31 December unless something else is specified. And that's important, you'll see why. Then we've got our additional information. We're required to do the general ledger again here. And we're also required to do the general journal as well as my post-adjustment trial balance. And finally, again, my carrying amount in the financial statement. So for this question, I want to focus only on vehicles. Again, we've got computer equipment and vehicles, but I'm going to focus only on vehicles. Computer equipment, you can look at the previous video. So for vehicles, we've got a closing balance on 31 December of 287,000 Rand. Then additional information, point number 2 says a new vehicle was purchased during the financial year on the 1st of May 2013 at a cost of 82,000 Rand. So let's look at our timeline. Right, so my timeline will run from the 1st of January all the way until the 31st of December, which is my year end. So the 1st of January 2013 to the 31st of December. Right, so the information says that the vehicle's balance on the 31st of December 2013 was 287,000 Rand. So on this day, the vehicle account had a balance of 287,000 Rand. We also know that on the 1st of May 2013 we purchased a new vehicle of 82,000 Rand. So if we go to the 1st of May, January, 1st of February, March, April, May, around about here, the 1st of May we purchased, so this is on the 1st of May, we purchased a new vehicle for 82,000 Rand. So that is a new vehicle. So let's just write here, new vehicle. Now this 287,000 Rand that was given to us in the pre-adjustment trial balance on the 31st of December, very important, is going to include this 82,000 Rand. So inside this 287,000 Rand is the new vehicle. So we can record that here. We've got our new vehicle that is included in the 287,000 Rand, and that is 82,000 Rand. So inside the 287 is 82,000 Rand. Also inside the 287,000 Rand are some other vehicles. Alright, so we've got some other vehicles. Ooh, I didn't get the spacing quite right there. And we've got a new vehicle. So the 287,000 can be divided between the new vehicle and the other vehicles. Now the other vehicles, there they are, and we can calculate the cost of these other vehicles by taking the 287,000 Rand and subtracting from that the new vehicles of 82,000 Rand, or the new vehicle, and that's going to give me the other vehicle balance of 205,000 Rand. Good, so that's something very important to know, because the balance that we're given in the trial balance is the balance on the 31st of December. That means whatever purchases or additions we were given in the additional information would already be included in the 287,000 Rand, unless of course the information said that the 82,000 Rand has not yet been included in the 287. But since nothing was mentioned like that, we can assume that the 82,000 Rand is included in the 287,000 Rand, which means that the 287 is made up of the new vehicle of 82 and the other vehicles of 205,000 Rand. We don't know how many vehicles there were, but I just drew here 2 just as an assumption. Now when we're calculating our depreciation, we need to calculate the depreciation for the new vehicles as well as the other vehicles. So the information says that vehicles need to be depreciated at 25% using the reducing balance method. So let's start with my new vehicle. The depreciation for the new vehicle is going to run from the date that we purchased this asset, the 1st of May, all the way until the 31st of December. So all the way until the 31st of December, and that is going to be May, June, July, August, September, October, November, December. That is 1, 2, 3, 4, 5, 6, 7, 8 months that we're going to use the new vehicle. Right, so when we do our calculation for the new vehicles, we call it calculation number 1. We're going to say our cost minus our accumulated depreciation. All of this multiplied by the rate and multiplied by the number of months that the asset was in use, divided by the number of or the total number of months in a financial year. So the cost of this asset on the first day was 82,000 Rand. The accumulated depreciation on the 1st of May was 0. So my carrying amount is 82,000. The depreciation rate was given as 25%. So we've got here times 25 over 100. And we've used this asset, very important, only for 8 months. So we can say 8 over 12. So there's my calculation. If I calculate this with a calculator, we've got 82,000 Rand, and we're going to say minus 0, which is equal to 82,000 Rand times 25 divided by 100 and multiply, remember, by the 8 months that we use this asset divided by the 12 months in a full year, and that is going to give me 13,666,67. That is the depreciation for the new vehicle. Right, now we can do the calculation for my old vehicles. We're going to use the same formula. I'm going to take the cost minus the accumulated depreciation. We're going to multiply this by the rate and multiply by the number of months that the old vehicles were in use, divided by 12, which is the number of months in a full year. Important that the cost and the accumulated depreciation that you are going to use in your calculation is at the start of the year. We're calculating depreciation on the 31st of December, but we're calculating it using the cost and accumulated depreciation figures at the start of the year. So what is my cost for these other vehicles, or we can say the old vehicles if you wish, on the 1st of January? We already calculated that, and it was 205,000 Rand. That's the old vehicles. Alright, so I can say 205,000 minus my accumulated depreciation on the 1st of January. So let's look at our information. All of these balances given in the trial balance was on the 31st of December, except for my accumulated depreciation on vehicles and computers. So the accumulated depreciation on vehicles was given on the 1st of January 2013, and that was given as 114,800. So I know that the full 114,800 relates to the older vehicles. None of the 114,800 relates to the new vehicle, because the new vehicle was only purchased on the 1st of May, and the balance of the 114 is given here on the 1st of January. So the full 114,800 relates to the old vehicles. So I can say 205 minus the 114 times 25 over 100, multiply by 12 over 12, because we will use the old vehicles for the full financial year, all the way from the 1st of January to the 31st of December, which is 12 months. Good. Calculate this with our calculator, and we can say 205,000 Rand minus my accumulated depreciation at the beginning of the year, which is 9,200, is the carrying amount, multiply by 25 divided by 100, which is the depreciation rate, and the figure there we're going to multiply by 12 over 12. It's going to stay the same. It's going to be 22,550, and that is my depreciation on the old vehicles. My total depreciation for vehicles, is going to be the new vehicles depreciation plus the old vehicles depreciation. So it's going to be the 13,666.67 plus my old vehicles depreciation, which is the 22,550, and that's going to give me my total depreciation for vehicles of 22,550 plus 13,666.67, and that is 36,216.67. 36,216.67. Right, so there we go. Now we can account for this in our ledger, journal and trial balance. We know that the question asked us to prepare the general ledger on the 31st of December 2013. So because we were not required to prepare the ledger for the whole financial year from the 1st of Jan to the 31st of December, so we're not required to account for all of these transactions that take place in between. We're only required to prepare the ledger on the 31st of December 2013. So in order to do that, we need to first include our opening balances on the 31st of December. So the opening balance on 31st of December for vehicles was the 287,000 Rand that was given in our trial balance. If we were required to do the ledger for the whole period, we would have had here 205,000 Rand, and we would have included our purchases of 82,000 Rand during the year, and either using bank or creditors control. But this question only asked us to do the ledger on the 31st of December 2013, so I can just fill in my opening balance of 287,000 Rand on 31 December. The opening balance on accumulated depreciation on the 31st of December was the same as the opening balance on 1st of January, which is 114,800. 114,800. And then I just need to account for my adjustment, which is what we calculated with our calculations. My adjustment came to 36,216.67, and that is the amount of usage of the vehicles during the year. We used the new vehicle for 8 months. We used all the old vehicles for 12 months. So the total usage for vehicles amounted to 36,216.67. Now, because we've used vehicles, the value of my vehicles need to go down. So I somehow need to decrease my asset. And the way I'm going to do that is not by using my vehicles account, but by using my negative asset account, which is accumulated depreciation, 32,616.67. And because I've used something, I've used an asset, I need to record an expense. To increase an expense, I need to put something on the debit side. The usage of an asset, or a fixed asset, is called depreciation. So I'm going to increase depreciation 32,616.67. And then I fill in my contra entries, which for depreciation is going to refer me back to the credit account. Accumulated depreciation, vehicles. Remember to specify which accumulated depreciation account to use, in this case vehicles. Don't just leave it accumulated depreciation. And in here we're going to refer ourselves back to the debit leg. So the credit leg, you're going to fill in the contra entry, which is the other account, and the other account in this case is depreciation. And we only have one depreciation account in the ledger. We've got multiple accumulated depreciation accounts, but only one depreciation account. So you don't have to specify your vehicles, you can just leave it as depreciation. Alright, that's the ledger. Then the journal entry is fairly straightforward. You'll see here I've completed that already. We're debiting depreciation with 36,216.67, and we are going to credit my accumulated depreciation account with the 36,216. Alright, and then finally we have to prepare the post adjustment trial balance, which was we're just looking at vehicles in this example. So after I've done my adjustments, the balance for my vehicles account is the 287,000 Rand still. So there was no adjustment to the vehicles account. Remember, the adjustment goes to the accumulated depreciation account. So my vehicles remain the same at 287,000 Rand. My accumulated depreciation account, however, for vehicles changed by this 32,000 Rand. So if we calculate that, 114,800 plus my 32,616.67 gives me, is that correct? 114,800 plus 30. Let me have a look here quickly. Let me just quickly check something. Yes, we seem to have made a little transposing error here. So the depreciation amount here was not 32,616, but it was 36,216. So let's just fix that. 36,216 and 36,216. Remember to check yourself, unless something like that happens. Alright, so let's calculate my accumulated depreciation figure again. It's the 114,800 plus my 36,216.67, which is going to give me 151,016.67. 151,016.67. And then I can calculate my carrying amount, which is going to be the cost price minus the accumulated depreciation. So 287, the positive account minus the negative account, together those two give me the value of the asset, and in this case it amounts to 135,983.33, and we are done. I didn't do the computers in this example. Remember, I only wanted to focus on the vehicles because there was a new vehicle that was purchased, and with the new vehicle that was purchased, we had to know that the 287,000 Rand balance that was given in my pre-adjustment trial balance already included this 82,000 Rand. That was the amount of the new vehicle. So 287,000 Rand minus the 82,000 Rand here gave me the 205,000 Rand, which was the cost of my other vehicles. So this was the important figure that we had to calculate. My vehicles are split between new vehicle and other vehicle. Brilliant.